All right, we gapped open to the upside, filled in that gap, came down to the lows of the day, but then rallied and closed up pretty decently higher, continuing with this trend that we saw yesterday, where big outsized move on the Russell 2000. That has its implications. So we're going to break down a little bit of that today. What does it mean when the Russell is outperforming? What does it mean when all these sectors? We had a lot of sectors outpacing the S&P today. What happens when that? Has there been any other instances of that's happened in the, let's say, in the past year plus? And the obvious answer to that is yes, there has been. I'm going to show you and show you what happens. But during that time where the Russell does outperform, we can be pretty decently bullish, and that's what we've seen the last couple of days, including today. We've been pretty decently bullish. We've had a nice broad rally. The market's continuing higher. All the indicators are showing very positive developments. Nothing is showing extremes as of right now. Nothing is showing extremes. In fact, it looks like there's potential for us to grow a little bit on this current move to the upside. So I'm going to break all that down. There's one intermarket relationship that's kind of driving a lot of this. So I'm going to show you which one that is. But there's also one that's showing us a little bit of a red flag, along with what volatility is showing us. So the options market is telling us one story, and the Russell 2000's outperformance is telling us another. So we're going to kind of put those two together, and then we'll take a look at our trade ideas. A stock that's been on an intermediate decline and had a big breakout, very similar pattern to what it had in those same time frames that we talked about before with the Russell 2000. So we'll talk about how to trade that. So let's go ahead and get started. Today is Wednesday, August 13th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's go ahead and start off taking a look at the S&P 500 with the market forecast indicators. You can see the intermediate line crossed above market sentiment today, well into the upper reversal zone again. 88th percentile, almost back above the 90th. Remember, it's not very common to be above the 90th or to stay above the 90th. And this was very uncommon to be above it as long as we were for most of this current intermediate rally that we've been on. But here we are again, almost right back up above it. The near-term line finally made its way really strongly up to that 90th percentile itself. That's a very, very good move to get there. It's been a nice little near-term rally that we've had. Starting off as weak as it was, but then the last 2 days really pushing through, getting new all-time highs both days. Now, not at the 2.5% mark, but pretty darn close to sitting at that 2.5% mark. So that continues higher. The momentum line's up. Now it's not in the upper reversal zone, so it technically can go up some more. Though we have seen it kind of falter the last couple of peaks here in bullish territory before falling back down to oversold levels, which has prompted some buying, some dip buying here the last few times. So we'll see, if that's the case. My expectation is that will probably come up a little bit more, so we'll probably follow through with this. We talked yesterday in the market outlook video about breaking the trend of up and down, up and down, up and down, or I guess down, up, down, up, down, up. So this was supposed to be a down day, and we follow. And as we thought yesterday, because of how bullish we were yesterday, that we'd probably have another up day today. That we break the trend today, and we did to the upside. My expectation is, again, with where the momentum line is, that there's a good chance that we can continue to build on this move that we're having. Again, we're only up 1/3% today, so this is hardly gangbusters, and I doubt if we go up tomorrow, I doubt it's going to be very much bigger than that. So expect smaller moves. Like yesterday's move was rare. That's uncommon, and it was kind of a breakout move because we got the new highs, kind of. But today's move is a lot more common, below average range. Well below average range. That's kind of when we're this bullish, that's what happens. That's what happened over here, and that's again what's happening again. If you look at the NASDAQ 100, you can see, it's again strong near-term line. Intermediate line is above the 90th percentile, was yesterday, is again today. Momentum line's up, barely in bullish territory. So again, hardly overbought from a short term, because again, if the near-term line, if the momentum line were to bounce up above 80, we'd have a cluster with all four lines. So, it's really not, again, that's kind of a function of the smaller ranges. We're not closing at the highs of the day, at least not today. We're not closing at the highs of the day. Probably would have had we closed at the highs of the day today. In fact, let's do that. Let's let me correct the bar, and we will put the close at the high of the day, which was 239.6927. So had we closed at the high of the day, we would have had a cluster, right? We would have had, so I mean, it's still below average range, but it's a matter of where we're closing, and that's what keeps us there. So obviously we didn't, right? We didn't do that, so we're down, no cluster, and so we're okay. We're okay to actually continue again to slowly grind higher to the upside. Your Dow Jones, which has been the weakest one out of these major indexes, it was actually a little bit of a catch-up trade. It was up today quite a bit. Strong near-term rally above the 90th percentile. The intermediate line still has a ways to go to get back above 80, just barely getting into bullish territory today. So that's a really, really good sign for the Dow. So yesterday we had a pretty decent move from below 40 to above 50. We didn't quite get above 60, but the momentum line was above it and wasn't quite above 80, but good near-term, good short-term sentiment bounce yesterday, and we had great follow-through today. The Russell was the one we talked about yesterday. They had a great short-term pattern yesterday, right? Really, really good because the near-term line again crossed 40 and 60. The momentum line was above it in the upper reversal zone. Well, this is what happens today, right? Almost another 2% gain. In fact, the two-day rally here for the Russell 2000 is one of the bigger two-day rallies that we've seen in a while, right? So if I were to change this to a two-day move, and go back to the Russell 2000, you can see the S&P is only up 1.4%, but the Russell's up almost 5% in 2 days. And again, the last time we had that kind of a move, we were coming off a significant low in April. The time before that, when we had a two-day move of over 5,000, was last November, right? Early November. So just for some perspective on what that looks like here. Again, the last time was coming off this low point. It actually included the down day there, but it was these 2 days, and the time before that was this move, right, where it was kind of similar. We were lagging behind the S&P, and then we kind of took off into the end of the year. We kind of took off, and that was kind of a theme of today's technical analysis class, was what happens when the Russell 2000 outperforms the S&P 500 and everything goes up, right? So you know, that we saw that last year here. We saw that, we're seeing that again right now. You know, what can we expect? So again, if you're one of our elite subscribers or premium subscribers, you get in fact, even our core subscribers get access to our technical analysis at just $59 a month. Check that out. We did a deep dive into that, and because that's what's going on right now. It's very relevant for the current market environment. All right, well, that does it for our Market Outlook preview video. The rest of the video is available, the full version is available for all of our Market Scholar subscribers, starting with our foundation tier. You can get access to that down in the description below with the links down there. Our foundation tier starts at $29 a month. You get access to all of our Market Outlook videos, which include a trade idea every day. You also get access to our Market Outlook live stream video we do at 3:30 Eastern Time before the market closes. We manage all the Market Outlook trades during that video. And then you also get access to our Market Outlook live trade tracker, where we track the results of all the Market Outlook trades throughout the course of the year. So you can kind of see the value of that, you know, compared to the subscription cost that you put into it. Again, it's $29 a month, or you get 2 months for free if you do the yearly subscription at $2.99 a year. So again, like I said, it's a great value and gets you a great way to get started with us here at Market Scholars. Thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video, share the video with anybody and everybody. Follow me on Twitter, Facebook, LinkedIn, all of our social media accounts. Make sure you like our content there as well. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.